This is a market outlook trading video where I'm going to show you the biases as well as the key levels for all of the currency pairs over here. Now, just a very quick recap about this week's performance. This week we didn't do phenomenal. Okay, it's not like we made a lot of money, but at least, we were slightly in the green. At one point in time, we were actually up quite good money, but eventually we gave it back. So this week has been quite difficult. We already warned you because there is the conference or the speech by ECB. So that's something that you should have noted. And next week, it looks like a disaster as well. So if you were to come over to here, next week you can see that we have a chunk of news event. Okay, there's just a lot of events. Now I want you to pay attention to a couple of things right here. Okay, first is that we have this one right here. We have the Aussie monetary policy. Then we have Japan press conference over here. Okay, so after that, it doesn't stop. It goes on into the USD news, which is the FOMC. Again, I always stress that FOMC is where a lot of people lose money because FOMC is a big event. And during this conference right here, people do not know what's going to be said, what are the questions that are going to be asked. And therefore, a lot of the smart money, the big players, they do not go in before the news. So for this reason, expect the market from Monday all the way to Wednesday to not move much, or even if it moves, the movement is going to be very whippy. It's not going to be one direction. So just be very careful next week. And then you also have this one right here, the Frank News SNB monetary policy statement. So basically a lot of the currency pairs are having their monetary policy statement. So you have Aussie, you have Yen, you have USD here. And then after that, if you scroll down, you also have pound. Okay, so basically you pretty much have everything happening next week, and the Fed chairman speaking as well. So just be very careful. Looking at this, I can tell you next week we are probably not going to trade much. We're going to cut out a lot of the trade that we usually take. Normally we send a lot of signals out, but I do not think that based on this we'll be sending a lot of signals out, just because we want to avoid this kind of movements. Okay, so before I run you through the key levels, what you have to know is that I'm going to be using the MPE trading strategy right here, which stands for market condition, price level, and entry. So if you are new and you haven't gotten this free day trading guide, please head over to the link in the description down below. Okay, do a pause on this video, head over to that link, download this. Okay, it's totally free. Just input your email address, we'll send it to you, and look at it first, because if not, you're not going to understand what I'm talking about or how I analyze the market here. Okay, at the same time, right, do appreciate you could hit the thumbs up button and subscribe if you have not already done so. It really helps the channel and I would really appreciate it. Okay, I'm spending my weekend. Right now it's almost 9 AM and I'm recording this video just for you. So really appreciate you could just do me that small favor. Now with that being said, let's go into the charts. I don't want to waste so much time. So this is DXY dollar index. So the first thing that we always look at is market structure, which stands for M. You can see right here that this is a high, this is the low, and this is a high. So this is an uptrend. Okay, this is covered in the 3-day trading guide right here, which I mentioned right here. So pretty elementary stuff. You want to be buying. Now the only issue is that price is pretty high, and you can see that this level right here is important. If you cannot spot this level, just switch over to the line chart and you can see why this level is important. This was the left shoulder, the head, and the right shoulder. So naturally, this level is going to be very important for DXY. So right now, price is a bit high, but there is room for price to go towards the next resistance level. Okay, I do not know if we will get a retracement down towards here first before going up, but what I want to show you is that this is an important level and this is an important level. Anyway, most of you guys will not be buying directly to DXY, but you just have to know that dollar is likely to strengthen. Okay, of course, if this level doesn't hold, then you probably expect a deeper retracement towards this level, back to over here. Okay. Now moving on to euro dollar. Euro dollar is very close to support. Now euro dollar is very close to support because previously we had this inverted head and shoulders pattern. Left shoulder, head, right shoulder, and you can see that now price is very close to this. Now just a very quick recap about last week's movement, why it was so difficult to trade. Okay, because this is the Friday's candle, this is the Thursday's candle. Okay, so what happened is that Thursday we had the news event. So Thursday, if you don't catch this, meaning that you don't trade before the news, you probably will not catch this move. And this close right here wasn't that conclusive as well. Okay, you can see that this close didn't really did a clean break of this level, and then it just started retracing up here. Okay, so by the time you get this big movement now is Friday, and this was the second last candle before the candle closed. Personally, we don't like to hold trades over the weekend, and we don't like to take trades towards the end of the market, and that's why we miss this totally. Okay, we miss this entire movement, but that's totally fine. Anyway, I digress. Back to the market analysis for next week. Right now, price is at support. However, market structure, I believe, is still bearish, because you can see that previously this was a high that wasn't violated, but if you were to just pay attention to the more recent price movement down, just switch over to the line chart, you can see that this is a high, this is a low, lower high, lower low. Okay, so market condition is bearish. Price level is this level right here. So what we need is we need price to just retrace up here, look for a candlestick pattern, and then we can short it down. Okay, pretty straightforward. It's just about being patient and not chasing the market and selling into support right here. Pound dollar. Pound dollar, same thing as euro dollar, is parked at support. You can see that there is a double top pattern here. You have a first top here, and then you have a second top here. Now, I would say that this pound dollar, the bias is kind of neutral. I won't say it's really bullish or bearish, because this is really like a box. Okay, it's a range play. You buy low, you sell high. Now, I just want to highlight one thing that's very important. So you can see that there is a support level here, but there's also a lower support here. Okay, so please be very careful. If you are going to short it, you want to short this down, do not just short when price breaks this level. Okay, because what happens that if price breaks this level, what might happen is that price might find support here, do a fake out of this level, and then start closing back above. And then you would have got stop out because you are literally selling into support. So this is very important. If you want to sell, then wait for price to break the entire zone, this entire zone right here. If you want to buy, then potentially you could look for a fake break setup where price breaks below this level, and then after that close back above. That's another potential setup, but that kind of setup, it's more complicated, it's a bit more advanced. So if you're new, I don't recommend that you trade that kind of setup, because it's not easy. Okay, it requires a bit more experience. But if not, I want to move on to dollar franc, because this is not something that I really recommend that you focus on. This is what I recommend that you focus on, because you can see that the direction is very clear. If you tell me that this market condition is bearish, then I really think that you really need to take a look at the 3-day trading guide and study the material, because there is no doubt that this is a bullish market structure. You have a high here, you have a low, higher high. In fact, if you count the sub waves here, you have a high, low, higher high, higher low, higher high, higher low, higher high, and you have this big movement up. So there's no reason why you should be selling at all. Okay, this is clearly bullish. Now, price is a bit high. It has room to go towards the recent high right here. So what we need is we need to be patient. We need price to retrace back into this entire zone. Just look to the left. You can see that there's market structure here, there's market structure here, and there's market structure over here. So just be patient, wait for price to come here, retrace here, look for a candlestick pattern, could be a bullish engulfing pattern, pin bar. Again, all these are already covered in a 3-day trading guide. So just be patient, wait for a confirmation here, and then you can take the trade to go long. Okay, very straightforward. This is the kind of setups that I recommend you focus on. It's high probability, it's easy, and the levels are very clear. Aussie dollar. Aussie dollar was a bit tricky last week, but right now it's much clearer. So Aussie dollar, I would say that right now the market condition is more bearish. If you cannot see the series of lower highs and lower lows, again, use my trick line chart, and then you can see that there is a low here, there's a high, there's a lower low, lower high, lower low. So pretty clear. Now, what's very interesting is that previously I did mention that this level might have been a potential right shoulder. Okay, if you watch my previous market outlook video, I said that this could be a left shoulder, this should be the head, and potentially this could be the right shoulder. However, if you just look at the price action over here, you have a nice engulfing candle right here, and then after that a retest, and then another engulfing pattern. But the thing that gives the most confidence about this level is this candle right here on Friday. You can see that candle's high, or the spike high, it's almost to this level exactly. So for this reason, I say that this level is still probably very strong. And if you want to go short on Monday, I think it's still possible because the risk to reward will still be decent if you do something like this. You can see that the risk to reward is still okay. 1:1.93 means for a dollar that you put in, you make $1.93 back, which is still not bad. So if you want to do it, you can do it. If not, you can be patient, wait for price to retrace higher, look for a candlestick pattern, and then you take a short down. So bearish bias for this one, you want to look to go short at 0.7320. Okay, just to round it up. Dollar CAD. Dollar CAD is like dollar franc, very straightforward. Market condition is bullish because you have an inverted head and shoulders pattern that is confirmed. Okay, this pattern has been confirmed. You have the left shoulder here, you have the head, you have the right shoulder here, and then this is the neckline, which has been confirmed. Now, Friday's close was a very good close because it closed above this entire zone of resistance. This high, this high, this high, this high, this high, and this high. Okay, it barely closed above this high, but it's not conclusive. It's not like a very big close like compared to this other few candles, but this is still a very significant close. So what I expect is that price will retrace a bit just to test back this level, and then you can look for a candlestick pattern here to go long. I don't recommend that you chase this because, as I mentioned, this close right here, it's not very convincing. Personally, I don't really like it. This close here. And remember, on Friday, we had quadruple witching day. So there is a high chance that the price is being manipulated to close above a key level just so that the options expire worthless. Okay, if you do not know what I'm talking about, watch the previous video and you should gain some insight about why I mentioned price was pretty whippy and why you have to be very careful last week. So this is the close. I expect price to just retrace lower, and then once it retraces here, look for a candlestick pattern, same thing as always, and then you can go long and target here. Okay, a lot of space between here to here. Moving on to Kiwi dollar. Kiwi dollar has finally broken this entire zone of support. So previously I mentioned that this entire zone is support. This close seems to be quite convincing. Okay, personally I'm very convinced that this candle here has closed below the entire zone of support. Now what I want to see ideally is a retracement here. Look for a candlestick pattern here and short. But let's say you want to be a bit more aggressive. What you can also do is you can do something like that, because there's quite a lot of space between here to here. Okay, now this one I really see this as a double top pattern. So for this reason, I think the market condition is bearish. Just switch over to the line chart. This is actually the first top, this is the second top, but because it's a candle that has a long wick, you actually see it here. But if you just switch it to the line chart, sorry, you switch it to the candlestick chart, you can see that this is the second top, this is the first top, this is the second top. Neckline is here and it's already broken. Okay, so bearish buyers expect for price to fall down towards here. Okay, we just need some form of retracement. If you want to chase it, you can chase it as well. Now moving on to dollar yen. Again, dollar yen, it's pretty messy. I mentioned this a couple of weeks ago and I mentioned this almost every single market outlook video. Please do not touch this on a daily time frame because you can see it's just ranging. So I don't want to spend too much time talking about a range which I've already given you the levels multiple times, week after week. I don't want to repeat myself too many times, but this is a zone of support, this is a zone of resistance. Personally, I'm not looking to trade this, and we have BOJ next week, as I mentioned earlier. You have BOJ next week, so perhaps this could be the catalyst that breaks price either to the upside or to the downside. Once price breaks out, then we'll look at it, but at least on a daily time frame and based on the MPE trading strategy, I don't think you should be touching this at all. Moving on to gold. Okay, gold, I already did an analysis, but I already mentioned that price is seated at support here. Okay, you can just look left, you can see that here is support and this is actually a demand zone. Now, the market condition is bearish, so it's still better that you lean towards a sell, don't buy just because price at support. You have a head and shoulders pattern. This is the left shoulder, this is the head, and this is the right shoulder. This is the neckline that was broken already. So we are in a bearish market environment. You have a high here, low, lower high, lower low. Just be patient, wait for price to retrace higher towards this level. Ideally, you get confluence with the descending trend line, look for a candlestick pattern here, and then you can take a short down. Please be patient because after this big movement, I don't expect price to just start moving very fast. I expect it to consolidate up, down, up, down, up, down slowly, retrace towards here, and then after that, make another sell down. Euro pound. Euro pound is bearish market condition because you have the first top here, second top, neckline broken. On Wednesday, price retested the neckline with this candle right here. This is like a shooting star candle. In fact, this could have been your entry candle. So you could have did something like this and target the level over here. You can see this is the previous swing low. You can do something like this. The risk to reward is not fantastic. So personally, I won't recommend that you take it like that. But if you could look for a retracement higher, something that goes up higher and you can short higher with a tighter stop loss, then that's what I will recommend. Right now at this price level, price is really in the middle of nowhere. It's in the middle of your support here and your resistance here. Okay, but bearish bias for this one, if I want to short, I want to short it at this level right here. Moving on to NZDUSD. NZDUSD had this very nasty sell down on Friday. I do expect it to retrace deeper now. Earlier, or rather last week, I mentioned that this is a strong zone, but right now it looks like this zone is going to be broken. And the next zone we have will be this level, which is a confluence between the ascending trend line and the previous swing high. In fact, if you pull out a Fibonacci, I'm sure it's about the 0.618 level. Okay, it's very close to this level, the golden ratio. So for this reason, I do think you have to be a bit more patient, wait for price to retrace lower here, and then once you get a candlestick pattern, you can go long. Okay, just be a bit more patient. Lastly, we have pound yen. Pound yen has been a literal pain in the ass because you can see this very nasty spike. This was Friday, this was Wednesday, sorry, this was Friday, this was for Thursday, Wednesday, Tuesday. On Tuesday, it whipped one more time. So traders who traded off this candlestick pattern, place their stop loss above, would have got triggered again. So very tricky. You want to be very careful if you are trading pound yen. This was another wipeout. Okay, it was another whip. Traders who placed their stop loss above this high, these 2 days of high would have gotten whipped out as well. Okay, let me show you in the H4. So above any of this high here, you put the stop loss here, and here you will get stop out. Very tough, very difficult to trade. However, I just want to warn you that the market condition is still bearish because we have this high, low, low, high, lower low, and this high is not violated. And right now we have a very ugly looking head and shoulders pattern. I'm not sure if you can see it, but this is the left shoulder, this is the head, and this is the right shoulder over here. Okay, very ugly looking, but this is bearish bias, and price is now at this 2 days of support. Okay, so I don't recommend that you sell right now immediately because you're selling the support. I recommend that you wait for price to break this. Try to get in with a tight stop loss, something like this. Let me just show it to you. Something like this, and then target here. Okay, this is how I recommend you trade it. Again, we will send this out in the Telegram channel. If you are not watching the market, right, we'll send it out to you if we see it. Okay, so that's it for this week's market outlook video, right? I want to remind you that next week's probably going to be very tough. I know you don't like to hear this. I personally hate to see weeks like this, but we have to address the facts and we have to be realistic. We have to be factual. These are the events that are going to happen, so this is what we have to be prepared if we want to trade. Okay, so I really hope that you manage your risk well. I cannot do that for you. I can nag at you about it every single week, but if you don't manage your risk, then really there's really nothing much I can do for you. I cannot help you to be profitable if you do not manage your risk. Okay, please do not risk more than 3% of your equity per trade. That's very important. Okay, so if you haven't got your 3-day trading guide, please go grab it. I do appreciate if you can drop me a thumbs up. If you have not already done so, hit the subscribe button. If there's any other currency pairs that you'd like me to analyze, please let me know in the comment section down below. If not, I'll see you in the Telegram channel. Please trade safe. I'll catch you in the next video.